So if you thought the term interest rate stuck fear into your heart, how about credit rating? Dun, dun, dun. Last week in our financial chat, we spoke about interest rates, how they're going to impact on us as a consumer, that end user, and why, feeding out of that, it is so important for us to understand exactly what is going on in the credit relationships that we get locked into. So feeding off that, we really do have to start a conversation about credit ratings. We've got our certified financial planner, Grant van Zyl, here to continue that education.
Awesome.
Had a wonderful reaction to the chat I think you had with Ewan last week talking about interest rates. It's crunch time. And when it comes to credit rating, it is vital, you say, for us to be educated. Why is it so important for us to know our own credit rating and others' credit ratings?
Yeah, well, I think understanding our own credit rating at the end of the day is a vital point of when you go to the banks. Because when you go to a bank or any financial institute where you're wanting to get a loan, the very first thing, the very first protocol that they're going to run on you is understanding what your credit rating is. And once they understand your credit rating, that will then determine what sort of terms you will get on the loan agreement. So if you have a good credit rating, it will then give you a better interest rate and a better term. If you have a bad credit rating, you'll get a worse interest rate and obviously a longer possible term.
And I suppose, set against the current economic climate, you're fighting for every inch. If you can get a percent here and there, it's vital. And I think it's almost like your book of life, your credit rating. You can't spin it. It's there. So what does it look like? What does a typical credit rating look like when someone's now assessing yours?
Okay, cool. So I think if we go back one step, a credit rating, let's explain that a little bit better. It's a very simple concept for people to get to understand, and it's basically a rating on your ability to pay your bills or your debt on a monthly basis on time, or your inability to pay your bills on time. And obviously, the better your credit rating is, the better you manage your accounts, the better your credit rating is going to be. The worse you manage your accounts, obviously, that's going to affect your credit rating at the end of the day. So so it's vitally important for you to make sure you are always in the positive side of things.
We can't reiterate that enough. Why is it so important to have a good credit rating? I think especially for young people when they're starting on that journey, why must we build that platform at the beginning?
Yeah, so you definitely want to get that right from the beginning. And the reason being is, once again, going back to those banks and all the different lenders, they are going to most definitely look at that before they even start looking at giving you any loans or agreements or anything like that.
And we were joking off camera, but often you only find out about your credit rating often, certainly as a young person, when you've erred on the wrong side.
Yeah, most definitely. Most people don't even understand that there is a credit rating around until you get into a bit of trouble, and then they start realizing, oh wait, I'm in a bit of trouble, and every loan that I'm going to want to get it going forward is going to be a little bit more difficult than in the past.
Well, we're going to look at how you can build a very positive credit rating and maybe how we can repair one if you have run into trouble. But we'd love to hear from you as well. 083 9133 728. You can post your questions directly to Grant. Now, I'm dying to hear his answer to this particular question, and I'll get it after this segment. We're about to ask, can money actually make you happy?